Hi, my name is Chris Tubby. I'm founder of Trading for Tomorrow, and this is just the weekly insights that I give you on both macro outlook and also some charts of products that I trade. So let's get on with it. Okay, so after stocks making yet another record high this week, markets fell back after midweek really. Even the Russell, where investors had switched positions out of the major stocks to the small caps, even that had a bit of a sell-off as well. Now, I've been warning about buying dips this time round, and you just got to be more careful, very selective, and get that timing right if you should be buying the dips. Gold also fell. That closed just above 2,400 after making a new high last week of 2,488, and oil also dropped. And of course, part of that will be because the dollar made a bit of a recovery, and that is again after the yen hit a 4-week high. So lots going on. Now, Netflix reported better than expected after adding over 8 million new subscribers. Tech was hit Friday after an issue with a cyber security firm caused a massive IT outage. I mean, the biggest so far, I believe. And of course, that hit sort of Microsoft globally. And of course, just highlights really how much we rely on certain companies. Obviously, as well as we rely on certain countries for goods and services. Tech especially, it's penetrated and it keeps on going deeper and deeper into every part of our lives. So this disruption, as I mentioned, probably the largest ever, hit flights, health services, banks, exchanges, and I'm sure probably many other sectors as well. Now, moving on, UK retail sales fell more than expected, and that was probably likely due to the election and also unseasonal weather. I mean, it was quite a wet month really. Companies are feeling not feeling, but failing at the fastest rate for more than a year. And of course, no surprises from the ECB, no change, no forward guidance, nothing except that decisions will be based on just data dependent really, just whatever happens to be. If they can get inflation even down more, then yep, there could be more rates, but I think they cut prematurely before, but that was because they'd said that they would, so they couldn't go back on that. And of course, it's just wait and see now. So, we're coming up to the summer recess for the central bank, so September's going to be the next round. But, they're not all, there's still some more to come yet. Now, Bitcoin, yeah, that sort of rebounded after Germany finished selling its supply that it had. And of course, it had a good bounce after that. And it was back up at 67,000. In Japan, growth expectations were lowered to below 1%. China, so there was very little from China's plenum meeting. It's just basically they're just sticking to the plan that they have created. Chinese investors have sold a record stocks and bonds. That was in May. And yeah, so China's still struggling. I mean, the biggest problem for them has been sort of real estate, and then sort of local government debt, which is related to that real estate because they've been making the loans against that. Now, Israel claims progress in destroying Hamas tunnels. Obviously, they're fighting on different faces at the moment. They've got Hamas, they've got Houthi, they've got Hezbollah. So, that's continuing at the moment. And they continue to be criticised for the level of aggression that they've shown in Gaza. And there is pressure to establish a Palestinian state. This is just going to go on for a while yet, I think. Russia, Ukraine, that war continues. You know, there was an exchange of prisoners last week, and more attention is being placed on Russian shadow fleet for exporting its oil. So there's going to be more sanctions and more sort of probably tracking of those ships. Okay, last but not least, sort of, I left it till last this week really. Let's look at the US. So the Fed, inflation slowly moving in the right direction still, but of course at the end of this week we'll have to wait and see what PCE data comes out at, especially as that's one of the Fed's key metrics. To me it still looks as though a September rate cut is likely. Uh, you know, I think it could be a 0.5% if they do it, if the data will support that. Most people are going to go for a quarter, so just a little bit different there. But, you know, we shouldn't forget, and I think that most have, that they've still got another meeting at the end of this month, and we shouldn't ignore that. But I don't think they're going to do anything yet. They need to just wait and see. But obviously things are moving in the right direction. Seems a bit strange, but unemployment is rising now to 4.1, but that's just taking away some of that jobs pressure, you know, wage pressure that's been built up. So, you know, in a bad way, you know, the Fed will be a little bit more comfortable seeing unemployment rising. And of course, now it's returning to pre-COVID levels. Now, you know, it could rise more than that though, you know, over the next few months especially. And of course we've got cooling consumer demand, spending, and that's a result of higher prices and of course these prolonged higher interest rates as well. It's all going to add to the pressure on the Fed to cut, but you know, when is going to be the big key question as we go forward. And of course, you know, as with all of them, they're all sort of data dependent. So, okay, let's move on to the US election. Biden's still under more pressure to step aside. And, you know, they've sort of delayed his Democrat nomination, sort of the roll call for that, until early August. But of course, time's running out to sort of replace him if they're going to. I mean, obviously Harris is the obvious choice, but I'm sure one or two others may throw their hat into the ring. Now all the hard work's been done. But, you know, they've got to make their mind up fast, whether they keep Biden or swap it. To be honest, at this stage, to me, it just seems as though they're handing the presidency to Trump. And of course, a Trump win could increase inflation. You know, perhaps we can call it Trumpflation. You know, he's looking to do some tax cuts. Of course, that's mostly going to benefit the rich already, and there can't be any surprise there. But tariffs and trade wars again, you know, remember his last presidency, that was part of his sort of key strategy, shall we say. Now, of course, the US government actually benefits from tariffs, but at the cost of consumers. But it is inflationary. And of course, he wants to curb immigration. Now, that's again is going to squeeze availability of workers. And of course, that's going to potentially push wages up a little bit more again. All of this is sort of inflationary, and you know, he does plan to remove EV incentives, and of course he's doing that to protect the US car industry, so that's quite understandable. You know, there's still not enough charging points. Sometimes it can be difficult to sell some of these second hand, so you know, I mean, yeah, sure, we all want to get rid of global warming, etc., but not everyone wants an electric car so far. Okay, so moving on to what we're looking at this week. So it's what I call global PMI week. Lots of countries are releasing that data. We've got earnings reports coming out from Alphabet, IBM, Tesla and some European banks. There'll be more, but they're just the key ones that I picked up on. US data includes GDP, there's some housing data, of course that PMI, durable goods. Just remember, durable goods are the bigger ticket. They generally cost more, so if demand for them's going up, again, it's showing consumer confidence in their earning abilities to pay for those goods. And then that leads on to Michigan consumer confidence. And of course, at the end of the week, we've got that PCE data coming out. In the UK, not too much, but we will see those PMIs. In Europe, EU, we've got consumer confidence and PMI. Germany, retail sales, PMI and IFO. Now, there's going to be a couple of rate decisions, one from Bank of Canada and also from the China as well, Chinese Central Bank. India will present its federal budget. Now, just remember that, sort of pretty much the schools, all the education elements is breaking up now, if not already, for the summer. And of course, this means that many traders will start to take some time off to spend with their families. In general, volumes will drop, but volatility will increase. So just be a little bit careful. Now, what I always say, I call it the 3 V's. That's just volume versus volatility. So if you reduce the position size that you take on, you can have a wider stop, but just remember your risk reward, and it should sort of equal the same loss. So if you'd normally go in with say 10 for 10 points, you could go in with 5 for 20 points. So you just sort of reduce your size down, maybe cut your size in half, double your stop loss. The loss would be the same as if you hadn't done that. But what you're doing is you're giving your trade more chance of surviving. The one thing you've got to do is, if you're going to move your stop wider, further away, I work on a minimum of 2-to-1 risk reward. So what you need to do is make sure that, imagine you're going to have a 20-point stop loss. You've got to look realistically, can I get a 40-point or more profit from that trade? So, it's just trying to help you guys. So there's another couple of slides to come, and then I'm going to move on to my technical analysis. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market, and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers, and as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.